Welcome, welcome. If you are listening to the podcast, you can jump ahead a couple minutes. If you are watching the replay on YouTube, you can jump ahead a couple minutes. For the rest of y'all, please send out the invite. I am sending out the invite. We are going to get our live studio audience in here so we can get the show going as soon as possible. For those tuning in for the first time, I am the 30-year veteran, Wall Street veteran of technology, software, AI, you name it, in that category. I've been doing this a long time. Retired in 2008, multimillionaire. Let's pull out our nice little Stock Talk Live slideshow. Boom. Okay, we got that there. And since my retirement, I have provided my research for free. Stopped giving it to the fat cats. It was a 7-figure-a-year job. Tough job, right? Giving picks to companies owned by people like Jim Cramer. Jim Cramer was paying me for my picks, yes. George Soros. And if you watch the movie Dumb Money, Stevie Cohen. Legends of the industry used to pay me for my picks, and now I give them for free to you. Why? Because my mentor is the reason that I went from being a stock market zero to somebody who could collect checks from Kramer's funds. So boom, there you go. We got the audience growing here. We got the invite going out. The veterans are doing their job. Thank you very much. Let's confirm the audio and video here, and then we're going to get started. Let's see here. Do we have audio? Do we have video? Oh, there we go. We got audio. We got video. We got decent amount of followers tuning in already, so that's good. That's good. Hey, good enough for me because we got a lot. We have a lot to talk about. We got space. We got AI. We got this bifurcated market, right? Like, have you not noticed the NASDAQ is just been collapsing? We're going to look at the charts. We're going to talk about stocks that I like now. We're going to talk about stocks that I'm buying now. We're going to talk about all that with who? Money Mark. It's Friday. It's Stock Talk Live. Another big show on the screen for y'all. On the podcast, you don't see this, but just know if you are listening to this, please go check out the disclaimers. And for you watching, if you see disclaimers on your screen, or even if you don't, get somebody to read this to you or read it yourself. And just know that if you move forward with this show, that you have acknowledged and accept the terms of this disclaimer. You owe me your firstborn and all that. Just, it's all the devil's in the details. This thing could say anything, right? So be careful. There's 10,000 clowns out there trying to get you to buy the stocks that they want. Oh, we're going to talk about that too. Influencers, all right? We make money on those guys too because we focus on valuation. We focus on the real deal. What got me paid by companies owned by people like Jim Cramer is that we really focused on valuation. Yeah, we like catalysts. Yeah, we like sentiment. Yeah, we like technicals. That's all good stuff. But you have to start by having the fundamentals and the valuation right. And you guys have seen that time and time again with the picks that we've produced, right? AHR, look at that. Still a hero. And by the way, look at that. Hanging around those red line levels. The light red line is where I used to have it. I did upgrade the red line level based on the phenomenal quarter they gave us. So it's not often that I raise or lower my green or red lines because over 100 hours of research go into those lines. Once they're there, they're pretty solid. But it's been years since I raised these lines. 3 years, in fact. Almost to the day. And now it justifies a slight increase. You see that? It doesn't, not that much of a move, but I have to make the move. When I looked at the numbers, we're going to go over it today. I'm going to show you why I raised those numbers. All right. Among other things. So let's get to it. We got a lot to go for. We got a great audience already here. By the way, really quick, for those of you who want to learn how to do what I do, how I make my millions, all right, or just understand everything I talk about on this show, because some of what I talk about is different from what you hear on other shows. There's a reason for that, because I'm not one of those 10,000 clowns, respectfully. All right. So if you want to understand what I'm talking about on the show, on X, this is pinned to the top. Listen to this. How I find multi-bag. By the way, there's no sponsorships. There's no advertisement. There's no, this is, I'm not an influencer. If I was an influencer, I'd just put some money towards this. I got 10,000 followers. I could have 310,000 followers if I just put a little money towards it, and I'd make more money on my trades and more people would buy my. I don't want that. All right. I don't want to wake up one day and the SEC is knocking on my door. We've gone through that. They like checking people out. And it's not fun. So I want to help people. I want to continue helping people. And so I have to do it a certain way. I can't have too big an audience, because then, especially the stocks that I deal with, it's hard enough to keep some of y'all from not shooting these stocks up 20, 30, 40% as soon as I open my mouth. No. Listen, calm down. We can make 200, 300, 400%, but it doesn't have to be all at once in one day. If you don't dig that, go watch one of the 10,000 clowns. I'm sure that's working out great recently, right? With all these optical stocks and SpaceX. They're doing great, right? It's a fun ride as long as it's going up. But as soon as it goes down, those clowns get smoked. You see Serenity on X. No offense to Serenity, right? Smart, seems reasonably intelligent, but declared, and credit to you, Serenity, declared on X, down 50% this month. Can you imagine losing half of all your money in 1 month? If you're worth 7, 8, 9, or 10 figures, losing half of that in 1 month, that's what happens when you deal with these 10,000 clowns. That's not me. I'm less than 1%, roughly 1% off my all-time highs in net worth. Okay, so I do this for free. There's no trickery behind it. There's no advertising, no sponsorships, no subscriptions, none of that stuff. But you do need to check this out, watch this, listen to this video, read this article here, and watch this video that's about to come up, I'm sure, pinned to the top of my channel, which isn't right now, but it is. You'll see a link to it. For some reason, it's not showing up right now, but there'll be a link to it in this article, Get Rich on Stocks. There's a link to a YouTube video talking more about my methodology and the risk-reward lines, and so you know the difference between technical lines on my charts and the fundamental lines, which almost nobody draws. The red and green lines, those are magic, and almost nobody does them. Those are proprietary to me. That's part of what made me get those checks from those legends of Wall Street. All right, that's my speech. I say no advertisement. Technically, that's an advertisement, so I kind of lie. But so be it. Hopefully, you guys can forgive that. Let's go to the macro very quickly so we can get right to the stocks. Fear Greed Index is doing fine. Look at this. Let me refresh. Is that real? Let me refresh that. Are we really at 50? No, 41. Okay, that makes more sense. But listen, if this Fear Greed Index was based on the NASDAQ, not the S&P, this is S&P based, which is a little more broad. So I like to focus on that. It's the stock market more as a whole. We are in fear territory, but barely. 41, barely fear territory. We want to get down to 25 before we even start really getting, right? We got down to 25 not too long ago, and I was like, all right, let me start buying some stocks. But I really want 10 or below. I want blood in the streets. I want people to be really fearful before I back up the truck. Back up the truck means this is irresistible. Everybody's desperate to sell stocks, so I'm going to buy it from the desperate. That's how you make money. Buy low, sell high. All right? So let's keep moving. Nothing to see here. There is something to see here because we took another leg up. Look at that. Another spike up. If this keeps up, this could become a problem. And we got to talk about this as well because part of this might be the fact that we're going to talk about it now. In fact, I put out an article on my site. Let's see. Let me put up separately. That's something else. Yeah, well, let's go here so I can show you the article that I put up there this week pertaining to the market. Very important. Short interest, summer liquidity, margin debt, and Q2 earnings. Okay, and the TLDR, the short story, so you don't have to read it. Short interest is positive because there's a lot of short interest out there. Margin debt is negative because there's a lot of margin debt out there. So I'm talking bullish or bearish. Positive is bullish. So short interest is bullish. Margin debt is bearish. Q2 earnings, bullish. The earnings are good. They're coming in good. The stocks may not be reacting that way, but Google, good. Intel, good. Pegasystems, bad. No surprise. Traditional software company. IBM, bad. No surprise. IBM, who are they in AI? We've not really heard their name in AI. If you haven't heard your name, if you are not involved in AI, your stock is probably down, except if you're Apple, who I think Apple has just been waiting on the sidelines to see who wins. Instead of trying to be one of the winners, they'll just partner. Now they've already partnered with Google. Google seems to be one of the winners. And Apple's just like, oh yeah, instead of spending hundreds of billions of dollars on CapEx like Google, I'm just going to sit back, wait, and I'm going to partner with one of these guys. That's smart, in my opinion. It's not the only way to win, but it's a great way for Apple to win because guess what? They've got billions of devices out there. They almost can't lose. Right? It's Apple or it's Android, and Apple just has to choose somebody to be their partner. That's where I think Apple comes in. Also, ServiceNow. Okay? Look at ServiceNow. Stock crushed, but up almost 7% today. They had good earnings this week. You saw the spike there, and then the stock went down, and now it's up again. Where will this end? It's tough to say because they are both a traditional software company, but also an AI beneficiary software company. Their software is kind of that layer that sits over your software and helps to orchestrate the utilization of AI across your organization. Things from security to execution, all that stuff. ServiceNow and CRM, Salesforce.com, are two of the companies that I see as entrenching themselves in AI, even as AI serves as a bit of a threat to their business as well. And what we saw out of ServiceNow was an excellent, magnifique quarter that they just gave us. Okay, much better than I expected under the circumstances. But you got a Pegasystems, right? Smoked. IBM, smoked. One of the worst days ever for them, if not the worst. But bottom line is the Q2 earnings so far, overall, and especially in AI, great. They're coming in very good. Okay? So that leaves summer liquidity. I mentioned 3 of the 4 names in the title. Summer liquidity is the issue, and that's why this interest rate chart brings it to my attention. This may be boring to some of y'all, but don't be bored by this. This is a large part of the reason why your stocks are getting crushed. Okay? It's a big part. The most underrated mover of stocks amongst retail investors, most underrated, underknown, is liquidity. Liquidity is like one of the top 2 movers of stocks in the stock market, and yet retail investors don't even know what it is. That's money moving in or out of the stock market. And right now, we have a headwind. That's bad. That's bearish. Headwind of liquidity right now. Why? Well, if you read the article, you know, so I'm going to keep it brief. And if you are interested, go read the article later. But I'm going to keep it brief for some of y'all who just want the quick story. But the U.S. government needs money. Well, that's no surprise, right? Well, it kind of is recently, because most of the time, around this time of year, the U.S. government needs money to get them through towards the end of September, when a lot of tax receipts come in from corporations. So a lot of money is going to come in from the corporations in September, but right now, this time of year, we've already passed tax day, and then the next tax day is up ahead. for the corporate September, and obviously much in the future for everybody else, April 15th type stuff. And so the government needs money to get them over the hump, like a short-term loan, right? It's like a payday loan. And so over the past year, since COVID, they haven't needed to borrow money to fill that gap. The money has been going down. Money goes down every year. From July to September, the coffers are draining from the U.S. government because there's no money coming in, but money is always going out. The difference is that in past years, we had like $2 trillion sitting around, just waiting to be spent since COVID. This year, it changed. That $2 trillion cushion is drawn down to basically zero, to the point where the U.S. government needs to borrow money to get them through to September. And when they issue debt, right, that sucks money out of the stock market. All else being equal, you see this interest rate rising. All else being equal, there are people out there, like retirees, let's say, who are looking at this and say, wow, I can get 4.3% risk-free. I'm 70, I'm 80 years old. I can't handle the stock market anymore. I'm going to have a heart attack. But 4.3% for the rest of my life sounds pretty good to me. I'm going to move some money out of the stock market and get me some 4.3%. Well, when the money comes out of the stock market, stocks go down. So issuance of debt, all else being equal, is a drag. It's a headwind. It's negative liquidity. And that's what we got going on right now as one of the 4 main things driving the stock market. And so far, that liquidity seems to be winning. Okay, so be aware of that. Why? Because that is not a reflection. One of my favorite things to find in the stock market is a supply-demand imbalance in a stock. Okay, in other words, selling that has nothing to do with the fundamentals. All right. Now, you could argue there's something to do with the fundamentals because what's going on in Iran and oil prices are going back up. Yes, yes, yes. Right. But the stocks are powering right through it. Corporations are powering right through it. There hasn't been a problem there yet. Okay. So, what we look for are situations like this. But we want to really get it when there's blood in the streets. Right? I've talked about that before. I want blood in the streets, and we don't have that quite yet. I mean, look at the Qs. We're still above the red line. We're still in bubble territory. I said the stock market is starting to be bubblicious, and since that time, I didn't change my narrative all time that this red line is a gravitational force on the market. Even in 1999, where the NASDAQ, the Qs went up 100% in 1 year. The gravitational pull dragged it right back down because valuation matters most at the end of the day. Okay? And that gravitational pull is weighing heavy right now because the liquidity is not there to help, among other things. All right? So keep that in mind. I'll give you one other. On a stock level, right? We're looking for situations where there is more selling than buying, but not for fundamental reasons. Cue the chart. Look at that. All right. I liked it. Perfect. Right there. Hold it right there. All right. Right here, we had an influencer who, by the way, probably got involved back here. Pumped the stock. Okay. Now, watch this. This is very important. This is a great lesson for y'all. Any trader out there needs to know this. All right. And any investor needs to know this. You will make money. You will make money on this without ever watching the show again. If you just listen to this. A bunch of people own Crescendo right here. Right? Back in May at about 650. And then the stock gets pumped. It just moves up, up, up. For some reason, right? I'm thinking finally people understand what this stock is worth. This stock belongs closer to 10 than 6. That's my belief, fundamentally. And finally, it's moving in that direction. Maybe finally people realize that, right? The stock goes straight through 9, straight through 10, straight through 11. I'm like, whoa, what is going on? And then I find out The stock starts getting tanked because all along that was an influencer with a ton of followers just saying, I'm buying the stock, I'm interested in the stock. Not for fundamental reasons. They just like the stock. They're influencing the stock. So the stock goes from 6 to 11 in a blink. In the meantime, by the way, if you know the rules, if you've watched the video, read the article, blah, 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 you know as the stock moves up like this, you want to take profits. Look at these lines right here. These technical lines tell you all you need to know about how to play this stock, even as you invest in it. And that is when you get up to these levels on the higher end of this channel, you want to take profits. So guess what? People own the stock before the pump. More people own the stock as the pump takes place, but the people that are in the stock for the right reason, valuation, are getting out because the stock price is getting closer to fair value. And then what's left? A larger percentage of people that are in the stock because of the pump. But then the pump ends and they all abandon ship and the stock just collapses even faster than it went up. And what ends up happening as a result of that is the stock doesn't go right back to where it was at the beginning of the pump. It goes lower because people like me don't rush back in to the stock. I'm waiting for the blood to be seen in the street. I'm waiting for the dust to settle. And sure enough, eventually it did settle here at $6.50 a share. I backed up the truck. I told you to back up the truck if you watch the show, if you're in my WhatsApp groups, right? And what happened over the next 25 days? Less than 4 weeks. 30% profit. Do you know what that is annualized? That is 4,600% annualized. Just look at the box over my head for proof. That's easy money. Because people who had no idea what the stock is worth, people who had no idea what they were doing, bailed out of the stock and gave you the opportunity to take those blindly sold shares under your wing at a very attractive price. If you are looking at this chart on YouTube right now, you see this is very attractive within the channel. And so we got a 30% rise. You take profits off that. I'm not saying you sell it all, but you definitely want to take some profit. You made 4,600% annualized on a trade. Take some profits, Jack, right? And then what happens? The same thing happened yesterday. An influencer came out and said, I sold my crescendo position. And all that influencer's followers said, I'm going to sell it too. And the stock thrashed. Boom. You didn't need me to go live to tell you what to do when something like that happens. There is no news. I've taught you this before. 90% of the time, a move like this is not because of news, especially if you don't see any news. If there's news, well, there's news, right? They missed the quarter. Well, that's news. The stock's down on a miss. That makes sense. But if there's no news that you see and the stock is down, there's probably no reason for it. So what do? We backed up the truck again and boom, the stock starts rising already. It's already up, say, 15%, but there's still a lot of meat on this bone because we're still at 669. The last time the stock dropped and got down into the 650s, 660 range, it jumped back to 850. And if you look at this chart right here, you can see, right? There is plenty of room. This stock belongs much closer to 10, much closer to the double digits than it does to the mid-single digits. These are no-brainers. And this company is doing great. I've talked about it before, so I'm not going to go over it again. But they've got 3/4 of tailwind. That's bullish from an acquisition that they made. They're taking care of business. I know the president and COO very well. I've known him for years. In fact, I knew him for years before I bought the stock. The first time I met him and I heard the story, I'm like, this sounds boring. I don't like it. They compete against Microsoft. They compete against Cisco. They're going to get killed. And then year after year, he continues to take my meetings. He continues to be gracious. He tells me the story. He delivers quarters. He starts kicking Microsoft and Cisco's you-know-whats to the point where Microsoft got out of the business completely. Cisco stopped investing in the business. Cisco's partners start defecting to Crescendo, and Crescendo starts winning even more business from these guys. And then, to top it all off, The way they sell their software, the way they charge for the software is on a usage basis. So if their customers start laying off employees in favor of AI, the usage doesn't change. There are going to be less users, but they don't charge per user. That's what a lot of other software companies do. Those companies are in trouble. This company, you can't replicate infrastructure. This isn't a software company. This is an infrastructure company that has software layered on top of it. That's different. If you have software run by a network, CrowdStrike. CrowdStrike is their software, but it's a security company that's based on a network effect. Look at that. That doesn't look like Salesforce's chart. In fact, I don't know why these lines are all over the place. We got to fix that at some point. But that's beautiful. They're near an all-time high. So this isn't a SaaS apocalypse across the board. It depends on the company. All right? We talked about that before. I like Twilio. Look at that. Doing great. I like Akamai. Look at that. Doing just fine. I mean, it overshot the mark, came back down, but that looks good. There's nothing wrong with that. This stock has been doing just fine. This stock is up 64% over the last 12 months. You just have to know the difference. And that's what Crescendo was. Crescendo has been moving. And look at that channel right there. I just zoomed out the chart. We'll make it a one-day chart. There's a normal chart with a 50 and 200-day moving average and all that stuff. And my red and green lines. You can see all that there. This looks exactly where you want to own this stock. And so I bought more of the stock. I sold more puts. Anybody that wanted to buy puts after the stock got smoked, oh yeah. I'll sell you those puts. If you don't know what it means to sell puts, go look it up on YouTube. I'm not going to teach you that here. I'm here to give you stuff that you can't get anywhere else. All right? So boom. There you go. This is easy money. 80-90% of the time, you're going to make money on this, and your risk reward is like crazy. You got an 80+% chance of making money on this, but your upside on this is like $3-4. Your downside on this is like 78 cents. And you got an 80% plus chance of hitting on the dollars as opposed to losing on the cents. That's risk reward. That's how you win in the stock market, is consistently making bets that are disproportionate in your favor. Not no 50-50. We don't want heads or tails. I don't want $1 if it comes up heads and lose $1 if it comes up tails. That's a zero-sum game. That's a waste of time. That's a game. I want situations where I have an 80% chance to win, and if I win, I get dollars, and if I lose dimes. And I'll make those bets every single time, and I do, and that's how I've made my 40% a year for 30 years. That's how I got to retire at age 38, a multimillionaire, and continue to make my 40% a year, doubling my money effectively every 2 years. Right? Of course, the U.S. government takes their share. All right. We're on fire a little bit today, but we took care of that. We're good with the macro. Oil is still rising, but it's not, talk to me if we get to 100, because the stock market didn't collapse when we got up to 110, right? April 13th, that wasn't so bad. Let's see what the Qs look like back in April. Zoom in on the chart there. Let's get back to April. There we go. April. Powered right through it. Look, oil prices spiked from March through, what was the peak right there? April 7th. All through March until April 7th. What was going on? The market just powered right through it, basically. There was a little blip, right? Whoop, whoop. That's like 1 or 2 weeks. That's 2 weeks where the market cracked and then just powered, just went parabolic. I'm not worried unless we get back up to these levels. Can we? Yes. Will we? Let's see, because a lot of people said we were going to be at 150 or 200. I remember, weren't we all in fear of $150, $200 oil? I thought Goldman Sachs said that. Goldman Sachs, the fattest cats. And yet, now seem like one of the 10,000 clowns. Don't try to guess things like that. They're too complex. There are too many moving parts in the oil complex for anybody to get it right consistently. Okay? There are very few people that get that right consistently, and this time the majority got it wrong, because the majority, I heard the majority saying, this is going to be 150 to 200 oil. Don't think so. All right, let's keep going. We don't waste time on those dummies. We want to focus on where we can make money, and guessing where oil goes next is not it. And this is the reason we want those disproportionate bets, because if we have an 80% chance of making dollars and a 20% chance of losing dimes, and we place that bet, and oil goes to 150 and the stock market comes down, big deal. I'm just going to hold CXDO a little bit longer. Big deal. That doesn't end the bet. There's no expiration date on owning a stock. That's the key here. That's why Warren Buffett became the richest man alive, because he just held. I don't do that. I'm opportunistic. He wasn't even opportunistic. He just buy and hold, buy and hold, buy and hold forever. Right? All else being equal, if you just buy and hold forever, you're going to do great. But if you can be opportunistic on top of it, taking these bets that are disproportionate in your favor, that's how you make the millions. That's how you go from zero, which is what I had. No, I didn't have zero. I had negative. All right? I had credit card debt. I was $7,000 in credit card debt, $10,000 in college debt, and still became a millionaire within about 10 years after getting out of college. How? Because of this, because of these rules that I was taught by my mentor. Okay, Alphabet, Google, great results. I don't need to tell you. To me, there's not much to see here. Right, we'll go to the chart though, so you can see what's going on. Stock down on the results. Two reasons: advertising revenue down. Right, AI I think is probably eating into that. They're doing a pretty good job in AI. Right, they're a pretty big name in AI, although I would say Gemini it's not been so good recently. Come on, Google, you guys got to do better. You guys were actually killing it at one point. Gemini, I thought, was the best at one point, and then, right? It's almost like you went out too fast and ran out of gas. Okay, so yes, the stock went from 272 to 405 in a blink, but now we're back to 319, partly because we're getting a transition in revenue. The advertising business is coming under a little pressure. The AI business hasn't filled that gap quite yet. And everybody's afraid. They raised CapEx guidance before. But what did I tell you? What did I tell you to put in your notebook? The only thing, right? Because there's a lot of moving parts in AI. The only thing you need to pay attention to is whether or not the hyperscalers continue to raise CapEx guidance. And as long as we see that, let me put it in simple terms you can understand. Who is smarter with regard to whether or not AI is a bubble? You and me, or the executive management team of Google, of Meta, of Microsoft, of OpenAI, of Anthropic? Because they're all raising CapEx guidance. They're all investing more in AI. All of them. That's called a unanimous decision amongst the richest, smartest people on planet Earth when it comes to AI. That's all you need to know. Don't talk to me about it. The Chinese must shut up. If the Chinese models were such a problem, then the DeepSeek moment months and months and months ago would have at least had these guys say, well, let's at least hold our CapEx flat, right? But they said, F that, we're going to keep spending more. That's because there's value in that. I don't know if I did put together a slide, I just don't know. Oh yeah, I did. Boom, there you go. I did some math. Is Google getting a return on their CapEx investment? You can read this on your own later. My big head is in the way of a little bit of it, but not the important part. All right? When I did the math, and you guys can get back to me if you think there's any flaws in this math, but I came up with a 20+% return on invested capital. So they invest in AI, and if they invest 100 billion, they're getting 20 billion back per year in free and clear after-tax profit. And that includes me counting their money, right? Because they had cash in the bank. But so in EBITDA, the I in EBITDA is interest. They're paying very little, if any, interest right now. But I put a number in the interest column because there's a weighted average cost of capital. You guys can look it up in your own. I don't want to bore people who don't understand this stuff. But the bottom line is they are making a good return on their investment. Shocking. If they weren't, would they continue spending? No. And that's why I say all you have to do is follow the money. All right, cool. The biggest story of the week, the biggest stock movement of the week, the biggest stock purchase that I made this week was in Gatekeeper Systems. This may be news to you. If you are not on my blog site, if you do not frequent markgomestocks.wordpress.com. Again, no subscriptions, no sponsors, none of that stuff. In fact, I probably ought to be on Substack. I'm just too lazy. I like doing research. I want to find the next multi-bagger stock, and I can't be bothered with Twitter and Substack and all this stuff, right? I want research. Do you want the next pick sooner, or do you want it later with a lot of tweets and Substacks? Okay, so the other article, where's the article? Oh, I haven't issued the article yet. So a lot of you guys don't even know. I got to do this. Okay, so let's talk about Gatekeeper. Holy cow. Oh, well, some of you know from last week. Last week's show, Toronto launched this streetcar. This was a pretty cool video. This streetcar project where they're going to catch people. No, we don't want to hear you, lady. We'll see the video of the... There we go, streetcars running. These are streetcars in Toronto. 4 of them are getting Gatekeeper cameras. And what they're meant to do is catch motorists breaking the law and then issue tickets automatically. Less need for police, right? Let's run that again. And so Toronto wants to figure out if they want to move forward with this. So they paid Gatekeeper about $500,000, about $120,000 per car, 4 cars, and they're going to test this for 9 months. They're not going to issue any tickets, but it's going to be mock tickets. Nobody's going to get a ticket, but they're, on the back end, they're going to say, all right, we know how many tickets we would have issued if we were live, and this looks great. Let's go live. If they go live, right? If they go live, within 9 months, they go live. It's not going to be 4 cars at $500,000 each. It's going to be 234 cars. And it won't be not $500,000 each. It was 120 each. There'll be a volume discount, right? It won't be 120 per car, but bro, if it's half of that, if it's 50,000 per car times 200 cars plus the ongoing ticket revenue, this is going to be a monster deal for Gatekeeper. We talked about that last week. That got the stock going a little bit. The fact that I told you that we are going into their busy season where they tend to win deals, that got the stock going a little bit. And it couldn't have been more prescient because I didn't know they were going to announce a deal, but they announced the deal. And not for nothing, where is it, back here? Right here. This article that I put out, you can read it. It still has merit right now. This was just June 15th, just over a month ago. I told you that I found deals on the internet, hidden on public sites. Right there's when a municipality chooses a vendor, they'll put it on their website. But Gatekeeper might not announce it. Especially there's a lot of these K through 12, right? Elementary schools, high schools, and stuff like that. If Gatekeeper gets a $100,000 deal, they're not going to announce it. If they get a dozen $100,000 deals, they're not going to announce it. But that's okay. Now we're talking about $1.2 million. What if they get like 50 deals ranging from $100,000 to $500,000 and none of them are worth announcing individually? They might have millions upon millions of dollars of signed deals that we don't hear about. That's normal in business. We don't hear about most deals from most companies. We hear about the big ones, like this absolute monster that Gatekeeper announced Monday. I came and told you on Friday that this sort of thing might start to happen because summer, they get a lot of deals every summer. $19 million contract. That's $19 million for those at home. That's more than half of a year's revenue for them. Boom. Okay? But they weren't done yet. The next day they announced another $1.2 million order. Right? Oh, no. That was 2 days later. The next day they announced earnings. Their biggest quarter ever. $12.5 million in revenue. Now, keep that in mind. Listen to that number. 12.5, right? But they said that their bookings, the contracts that they have signed over the last 9 months equal not 12 million, 72 million in 9 months. That's over 2 years of revenue in 9 months. That's $24 million per quarter. They just announced their best quarter ever, and it was only 12. But they're signing contracts worth 24 per quarter. They're signing deals at double the rate of their record revenue. And the profit, nearly 20%, dropped to the adjusted EBITDA line. Monster quarter, amazing quarter. It forced me to redo my DCF. That's a valuation analysis. Here's what it looks like. Let me see. I got to show you in Canadian dollars. I didn't translate it into US yet. There you go. You guys saw this maybe a few weeks ago. This was my prior DCF. I had to raise it up more than half a buck. This stock should have been up half a buck on this news because the DCF went up half a buck, and the stock should keep going beyond that, right? In my opinion. But it's got resistance at the 200-day moving average. Shut up. No. Don't shut up. Tell everybody that so that they don't buy the stock. To make it easier for me to buy it. Because, when you have as much money as I do, it's so hard to buy a stock. It's so hard. I can't go in. You think I can go in there and order 100,000 shares of this at a time? Great. Let me place a 100,000 share order. Let me place a limit order so everybody knows I want 100,000 shares. And then do it again and again to get the number of shares that I actually want. Oh no, even better. Let me place a market order and have the stock just take off. No. I buy this stock like 2,000 shares at a time. So nobody knows I'm buying. And let them, it's a 200-day moving average. Good. Knock the stock down. Better for me. Cool. Stock's down 3%. Good. Better for me. Right? Because people don't think about things the right way. This is why I lost money. This is why I was $7,000 in credit card debt. I didn't have any credit card debt before I graduated college, but as soon as I did, let me get a credit card. Let me take $2,000 off this credit card and put it in the stock market. I'm going to be rich. Stupid, dumb, thinking college actually teaches you something. It doesn't. It was no better than an extension of high school, to be honest, what I learned in college. Great experience. The diploma was invaluable. The networking was invaluable. And yeah, I learned some things. But I would tell you that 10%, only 10% of what makes me the millions every year came from what I learned in college. And so you got all these kids coming out of college with finance degrees, watching CNBC, both of which are a joke. I can tell you that now, that I know for a fact, in hindsight, having graduated in college, 33 years ago, that it's a joke. The real deal has nothing to do with 200-day moving averages or anything like that. It's what's the stock worth. And you have to train yourself to figure out what goes into that. What goes into the DCF. Because anybody can do a DCF analysis, but can you put the right numbers into the analysis? A formula is no good unless you put in the right numbers. All right, I'm not going to bore you guys any further with that. The bottom line is this was a blowout. The DCF goes up. The company seems to be operating on all cylinders. The stock is nowhere near the all-cylinder level. This stock should be much higher right now, in my honest opinion. Then they got this announcement, Bluebird and OEM. They're starting to get baked in. They're starting to be situations where if a bus gets made, it gets made with gatekeeper equipment already on it, coming out of the factory. Okay? That's what's happening to these guys. They're winning more and more market share. They're elevating themselves. I told you about Bus Patrol months ago and the troubles they had. Now cities won't do business with them, and they're doing business with the gatekeeper. You see the Toronto deal. That could have easily been a deal for Bus Patrol, but they don't trust Bus Patrol. Bus Patrol is a S show. You know what S stands for? What else? Oh, I learned about a new mandate. There's all these mandates, by the way. People want kids to be safe. People want the subways to be safe. You see in New York City, people are afraid to take the subway. Let's put cameras in there. Let's put cameras on the trains, cameras on the buses, cameras on the trains. The governor of New York made it a mandate. The governor of New York said, there has to be cameras, all the trains. Well, they're going to buy them from somebody, right? The FRA, look up who the FRA is or go look at my research on my website, mandates every train across the United States has to have these cameras. I just found out about a new one. It is called, and it's not, I don't know if this is new, it's just new to me. Canada, 360-degree camera law. They want their buses, they want their public transportation to have 360-degree camera views into what's going on. Cameras are going everywhere. Gatekeeper is equipping those cameras with AI. They have a data center that can support tens of millions of dollars of an incremental business, and they're winning deal after deal after deal after deal after deal after deal. Okay, so let me get my pen out. That takes care of gatekeeper as far as that goes. I've got something here that says, look at my napkin. Let me look at my napkin. I wrote something else down. I talked about that. I talked about that. Oh, people complained. Oh, Mark, the cash was negative. They burned cash in the quarter. Are they going to raise more money? Shut up. I tried to tell you. And yes, I'm going to pick on you. I'm not going to name names. But I've been doing this for 30-something years. You asked me the question. I give you the answer. No. Cash went down because they built up inventory because demand is so high. Does that sound bearish to you? But the cash went up, but the inventory went up. But what about accounts received? That's New York City. You don't think New York City's going to pay them? Do you think they're going to keep not paying them? It's going to stabilize. But when you raise money, they've got letters of credit. They've got people, they got banks out there waiting to lend them money because this is easy money for the banks. This is easy money for the banks. This is who you want to lend money to. The company that LA and New York and Toronto and Philadelphia, 4 of the top 6 transit authorities in North America, choosing gatekeeper. Get the F out of here. Don't try me like that. I give you the answer, take the answer, or don't ask the question. Also, memory prices. This is crazy. I didn't tell you about this last week. That takes care of the napkin. Memory prices going up, DRAM going up, Micron, Samsung, SanDisk, right? Guess what? Gatekeeper needs storage memory for their devices. How else are you going to catch all the bad guys? How else are you going to have all the AI models loaded up and all that, right? But here's the crazy thing. It's not a negative for them. It's not even neutral. It's a positive. Why? So guess what? For those of you who are getting bored about hearing about Gatekeeper, Gatekeeper is a memory play. And nobody knew that. Why? Here's why. Because when they signed contracts with these customers, $72 million of worth in the last 9 months, right? And remember, 9 months ago, DRAM prices weren't through the roof like they are now. But when they wrote these contracts, Gatekeeper, in their infinite wisdom, said that there is a % markup on the memory. Okay? Not a dollar markup. It's not, if your memory costs $500, we're going to charge you $600. And if it costs you $900, we're going to charge you $1,000. No matter what, we're going to make $100 profit. No. It was a % margin. In other words, as memory prices go up, Gatekeeper makes a bigger and bigger dollar profit. The % margin stays the same. But if memory prices double, their memory revenue doubles without hurting margins. Part of the reason why their EBITDA margins rose to nearly 20% in the quarter. These guys are hitting it out of the park. Okay, now I'm done talking about Gatekeeper. Let's talk about other AI stocks so don't bore you guys. We don't want to lose followers and all that stuff. We're not going to talk about that right now. That'll bore people. Let's talk about something more exciting. Let's talk about TSSI. How about that? That sounds exciting. And we're going to talk about AIR, AEHR next. And we'll go to some of this other stuff that's maybe a little less boring. Plus, I got sheets of paper. I have so much stuff to talk about today. It's crazy. We're going to try to get through it because, as always, I want to get through every single question. It's my goal every week to get through every single question. And for those of you watching, if you have a question, put 3 question marks at the beginning of your question, and I will endeavor to answer it. Do not troll me. Do not pimp your own stocks. Those are my 2 main rules. I will ban you from my channel. Okay, so be gone. And oh, by the way, yeah, I don't charge, but give me a thumbs up. I mean, what the F? Like, you can't just click the thumbs up button for somebody giving you all this for free, please. All I ask is that you spread the word. Let people know that there's somebody that's not one of the 10,000 clowns calling those dudes out, letting you know where the 10,000 clowns reside, and giving you the real deal for free, something I was charging 7 figures to Wall Street for back in before 2008 when I retired. Okay, TSSI. Chart looks like dog doo-doo. Dog doo-doo. Like all the AI stocks. They've been getting smoked recently. And not for nothing, but the stock was here at 18, was high in the risk-reward range. Look at that. Look how beautiful that's been. Look how beautiful this has been. I told you to buy this stock right around 3, right? Below the green line. You guys know what the green line is if you've watched my video, read my article. Excuse me. I'm allergic to money. And the stock ripped. It went from 3 to like 18, 19. And at that point, it was near the red line. And the risk reward rule said sell. Buy here, sell here. Boom. Stock goes to 6. Oh, but wait, now we're closer to the green line. You can buy again. I didn't say to buy, but you should have known. You can start buying the stock. The lower it goes, as long as the story remains the same. And the stock, boom, it ripped. In fact, it ripped so much it went right through my red line. I did not own a share above the red line. Oftentimes I won't. Once the stock gets to the red line, I'm out. Because I want juicy. It's not juicy at the red line. We'll talk about AEHR. Slight exception I'm making there, right? And I'll tell you why. And it came back down, right? $7 a share, close to the green line again. Pop! 7 to 17. Beautiful. And now we're back down to 10. We're in the middle of nowhere. It's not near the green line. It's not near the red line. But they haven't announced earnings yet. And that's what I'm here to talk to you about. I did some work on this. Now, most of you already know that I had some parking lot checks done. Thank you. You know who you are. M. And M went to TSSI's parking lots. Okay? I said lots because it was on multiple occasions. Saturday night, the parking lot was almost full. Sunday night, still largely full. Wait a minute. Why are people working at why is almost the whole company, almost the whole parking lot full on a Saturday night and a Sunday night? Oh, they must be busy. Okay? And I told you that they would be in the month of June when these checks took place because Anthropic did a deal with XAI. And as part of that deal, when I did the investigation, it specifically said they'd be upgrading Colossus, the XAI data center, to accommodate what Anthropic needs, more compute. Well, who built Colossus? Well, if you were around when I told you to buy at $3, you know why I told you to buy at $3? Because I was the first person to publicly find out and tell people that TSSI was building Colossus for Elon Musk. And that's what made the stock take off. So clearly, to me, they were upgrading Colossus throughout the month of June. All right, so what does that mean? That's June. Q2 is April, May, and June. One good month does not make a good quarter, and in fact, the stock market has been acting like crap throughout June and July. So F you and your parking lot checks. Not so fast, right? Now, of course, we're right 80+% of the time, so we're still wrong sometimes. But I double down on research. I double down on math. And in the transcript, I reread, and salute to you in the group, you know who you are, who brought this up and made me say, oh yeah, you know what, I forgot about that. In the Q1 transcript, they talked about, and if you look at Q1 versus Q4, look at this integration review. That's AI integration. It was flat, 14 million, 14 million, a little less than 5 million per month. But during the Q1 call, they said that business is ramping up in such a way that by the end of May, we will have done as much rack integration, not revenue, rack integration, that's volume. By the end of May, we will have done as much as we did all last year. Okay, that's all I need to know. Now I know that 5 months of 2026 volume equals 12 months of 2025 volume. I can get some sense to what the pricing has been, how it's fluctuated, right? And my estimate is that April and May were somewhere on the order of, let's say, 5.5 million a month. It was just under 5 million a month in these quarters. See, 14 million. 15 million is 5 million per month. 3 months times 5 million is 15 million. They did 14 million. So we're talking about 4.6 million per month. I think they did closer to 5.6 million per month based on that comment. So that's 11 million bucks in April, May combined. And then June kicks in. Running some math, I think June might have been an $11 million month. Okay? So it's possible. I'm not throwing a dart at the board. I'm not trying to get the bullseye. But there's a decent chance that they've done $20+ million of rack integration in Q2. Don't hold me to that. What's more important is looking at the street estimates. All right, we're going to pull up the street estimates, and what you're going to find is, now, if you were looking at that model, what you also saw was procurement revenue going up. Okay, here come the analyst estimates. We're going to go back to the model. Procurement revenue goes up. That makes sense. If they do, all else being equal, if they do more rack integration, they're going to get more procurement revenue. So I did a proportionate. 40 million on 14 million of rack integration should roughly be 60 million on 22 million of rack integration. And then I looked at the facilities revenue and I'm like, that's nowhere. This has been a nowhere part of their business. It's nice. You make an extra $1 million. That's going nowhere, but whatever. Let's add it in there. Add it all up. I get 83 million as being possible for these guys for the quarter. Again, if they do 80 million, don't say, they missed your estimate, Mark, the stock should go down. No. This is where it's important to look at Wall Street. Wall Street doesn't have them doing 83 million. Wall Street has them doing, quarterly, please, zoom in, 44. Hide the chart. 44, highlighted now. 44, 45, let's call it 45. I have a hard time believing they're only going to do 45. Why? Because they did 55 last quarter and 60 the quarter before that. Revenues has to drop down to 44. I have a really hard time believing they're not going to beat those numbers, if not crush them. I don't think it's, I think I would definitely sign up for 55. Feels pretty comfortable. Not 44, 55. That's a really nice beat. Right? 65? I think 65 is very doable. 75? Yeah, it can happen. And 83, I'm not going to bet on that, but it's doable. It's possible. I do think that's possible. Okay? So there you go on TSSI for what it's worth. I don't have as much, like I had this thing nailed a couple quarters ago. Nailed. Like I knew it was going to be a monster quarter, right? And so I told you that. I was like, I'll make a bet. I got 1, 2, 3, 4 major data points saying that this is going to be a great quarter. This time I've really only got 2 pretty good data points saying it's going to be a great quarter. But the math on top of that says it should be a great quarter. All right, so that's TSSI. There's your chart one more time. Okay, next, AEHR. Why did I want to start here? Let's start here, by the way. This is a very quick pat on the back down memory lane. July 16th, 2021. I wrote this article called Air Taking Flight. The stock was at 3. And I showed all this data about how Tesla is likely the end customer of AEHR solutions, right? And where's the word? There it is. Air has been sitting in my real-time performance tracker. That's where I track the stocks that I am most interested in for years, but doing nothing. The reason's simple. The company has been in wait time. If you want to know what that means, you can look up this article and click on it, or Google Mark Gomes, Great Find, Wait Time, Gold Mine, and you will make money. You will not need to watch this show ever again, and you will make money by understanding the concept of Great Find, Wait Time, and Gold Mine. And those who know that wait time is bad for a stock. The company has been in wait time. That was bad for the stock. The stock was going down. But last night's earnings call finally signaled Air's graduation into the gold mine phase. And boom, that was right here. And the stock took off from there. Oh, that was right there. There. And took off from there. All right. Stock went from 3 to 53. Ultimately. That's how you make easy money. That was easy money. It was some of the easiest money I ever made. And people are like, hey, HR, what's that? That's garbage. I've spoken to Gain before. He's a liar. He never does what he says. Shut up. You don't know what you're doing. That's all there is to it. And the proof is the stock went from 5 to 50, 3 to 53 in your face. So there. PE ratio. Never heard of the stock before. You don't know what you're doing. Okay? And you didn't know here when the stock hit AI gold mine and you gave me the same BS. Good. That's why you're not rich. And that's why I am. But let's fast forward now because what I'm interested in is, has this 136 estimate changed? Hide the chart, for Christ's sake. I hate that chart. 136 is the Wall Street estimate for fiscal 27 revenue. It's wrong, by the way. It's wrong. It's going to be, I think it's going to be at least 155, 160. Okay? And I've been saying 150, now I'm raising it. I've been saying 150 or so since this estimate was like 80 something. I was like, Wall Street's stupid. Wall Street's full of idiots. They're the 10,000 clowns as well. They're among them, right? Let me hit the refresh and see if we've gotten anything more than 136 since the last time I checked. Nothing. They're not raising their estimates. That's cool because that just makes it easier for AEHR to beat estimates. The quarter they announced was just too good for me to not raise their numbers. Oh, by the way, this is an old spreadsheet of mine, okay, where I was tracking what was going on and all that stuff. It goes back to 2015. That's how long I've been following this company. I started this model back in 2015. And it took until 2021 before I declared it a gold mine, back up the truck, buy. That's what I do. I will follow companies for years before I say, gold mine. It was wait time from 2015 to 2021 and worth every moment of following that stock for 6 years for the amount of money. I'm not going to tell you how much it was for the amount of money I made on that stock. This will continue as long as those hyperscalers keep raising capex. There will continue to be more equipment needed, and there's going to be more equipment that's going to need to be tested by Air, and that is why I decided to raise my red line to this level. Let's zoom in on where we are right now. Like, we're already up there. That's the problem. Okay, so there is, frothiness under the stock. It's not a bargain. Right? So the way I do that, I sold puts. I said this earlier in the show about selling puts. Look it up on YouTube what that means. I like selling puts on AEHR. I will, and yes, we will get to Q&A soon enough. I got to speed things up. I'm going to go lightning round on the information so we can get to the Q&A, but I have some juicy stuff still left to talk about. Let me go to AHR. I'm going to tell you right now, I own no shares, but I am well positioned to profit on this stock because I've shorted puts. I've sold puts on this stock. Somebody sold me the April 55 puts for $2.70. That means I make 100% I make 100% profit on that. I get the whole $2.70. I get to keep all that as long as AEHR is not under 55. Option expiration August. That's less than a month away. Right? And then I also did the September 45s. And somebody gave me $4 for that. That's easy money. That's easy money. This is how you can learn. And look, if I'm wrong and the stock does go down below 55, guess what? I want to own it there because that'll be the bottom of the technical channel for a company that's doing so well. All right, so a little lesson there for you. All right, let's get to some more juicy stuff. Little housekeeping. For those, this is the watch tracker. So those of you who are like there should be no surprises around. Oh, good Lord, what did I do here? Hold on. Where's my live chat? There we go. Live chat's back. This has been available publicly. I've shown this before on the show. For those of you who have been watching this tracker, know that it went absolutely berserk. They went from 5 AWS, that's Amazon deployments, straight to 20, straight to 50 in a blink back in April. Right? And continued a little bit higher in May, got up to 64 in May. Let's go to the chart. And look, that's right about where the stock peaked. There it is, May 1st, the peak of the stock, after this sharp run-up in AWS deployments. Okay? But since then, crickets. We got up to, let's see, on May 1st, we were at 59 and now we're at 67. So, okay, we've gotten a few more since then, but nothing like what it was. I mean, we went from 5 to 55 in a blink, and then 55 to 65 is like, took a long, and it's not, just hasn't moved. And that's why the stock is pulled back, at least one of the reasons, right? Because anybody that's watching the fundamentals can easily see what's going on. And that's what we want to do, right? Because I picked this stock long before this chart existed. I was talking about the stock in the single digits, made it an official pick around 14, and it kept and then they did all this, and then this went berserk, validating what I was saying. But we have to wonder what's happened since, because it's flatlined. They added a couple more POCs. That's nice, but one of them's a partner, and the other one, I don't know who that is, but it doesn't seem like, it's not McDonald's. It's not something as big as McDonald's. It's not a 7-Eleven. We need to see more. Now, before you go off and sell the stock, look, it's all the way back down to $14.50. Okay? They've got $7 of cash. That leaves 45, listen to this, that leaves them with $45 million of enterprise value. 45. A professional, an institutional investor, did an analysis of their intellectual property, their patents and all that, and estimated that those patents, that intellectual property, is worth about $100 million. Okay? So there should be no reason why this company wouldn't get acquired for $7 of cash plus the $100 million of intellectual property, which equates to another $14 per share. 14 plus 7 is 21. Stock's trading at 14. I don't care if things have gotten soft for a while. We'll see if it continues. It shouldn't. This should be going up. I don't know why it has a little soft spot here. Maybe they just had too many deployments so fast and they needed to digest. If you eat Thanksgiving dinner, you might not eat again until noon the next day. So maybe that's what's going on. I don't know. We're going to find out on the earnings call, but people that are panicking out of this at this level, my question to you is, where were you in the 30s, right? When we were close to the red line and we saw this start to flatten out. You saw the second derivative, right? It was stopped going straight up and started to level off. And it just stayed leveled off from that point. Once it started to level off, that should have been an extra sign to you. Put this in your notebook. The stock is high, and we're not seeing continued momentum. We didn't see stagnation yet, but we didn't see continued momentum. So how's the stock supposed to see continued momentum if we don't see continued momentum in the business, at least that's visible to us? And that's when people are going to sell. They're going to say, well, the stock's high, I made a great profit, we're near the top of the risk-reward line, and the momentum is stalled. I mean, there's everything there is telling you to take profit. I'm not going to tell you that because I'm not going to smush the stock. I gave you the formula. I told you how to track this thing on your own. I go through great lengths. I go to great lengths to make sure that I don't spike a stock, and I go to great lengths to make sure I don't crush a stock when I get in and out like these influencers like you saw in Crescendo. That's called, to me, that's market. It draws. I'm not going to say it's market manipulation because I don't know this influencer. It may be honest and very innocent what he's doing, but it's going to draw attention of regulators. I don't want to do that. I want to be honest. I want to help people make money. I don't want to rug pull people. That's one thing for sure, because whoever was pumping CXDO up at these levels, whoever bought up here, look at that. The volume peaked at that level. There was $17 million of volume in 1 hour that day. And all those people got rug pulled. And they probably sold the stock and said, I will never buy this stock again, which was a huge mistake. So it's a double loss because they lost money on the stock and now they hate the stock when they should really like the stock and just hate the game that got played. All right. So put that in your notebooks. Learn these things. Housekeeping, Radcom. Stocks pulled back recently. Why? There's some SEC disclosures, so don't act on this. It's already too late. But one of the activists were selling shares. So what? You cannot know why anybody's selling shares, even an activist. Even a company that owns 20% of the company. I looked into it. Guess what? It's not uncommon. What these guys seem to be doing is they find a company and they say this stock is too cheap. We want to buy the stock. And let's say they say, we want to own 5% of the company. They buy 5% of the company. They call management and say, hey, you guys need to make some changes because your stock's so cheap. And they say, F you. And they're like, F us? Okay, we'll fix you. Buy 20% of the company. And they buy up 20% of the company. Now they call them and say, we own 20% of the company. We want more new board members because you told us to F ourselves. Now F yourselves. Next thing you know, there's a new board of directors. A board of directors that is going to listen to the shareholders and unlock shareholder value. Okay? But this goes back to the beginning of the story where those guys didn't mean to own 20% of the company necessarily. They may have only wanted to own 15% or 17% or 7%. We don't know what. They wanted to own a lot of the company, obviously. And to some extent, they needed to buy extra to get the votes needed to get the board members kicked out so they could put people in place who will actually make the stock go up. And once they accomplish that, and this is where I say they've done this before, they'll trim back their position because they don't want to own too much of a stock. I don't like to own more than 10% of my net worth in any stock. That's my limit. I can't. I'm going to have a hard time sleeping at night if more than 10%. Like, I got a big net worth. 10% of my net worth is still a big number. I don't want to go to sleep knowing I own that much. Right? X million dollars of this stock. No matter how confident I am, I'm more comfortable having a 10% maximum. And institutions do the same thing. So they trim the stock. That's not bearish. That's just an opportunity for you to take those shares, just like what happened to Crescendo, off of the hands of somebody who had too many shares because they needed to buy those extra shares to take over the board, to unlock shareholder value, which, by the way, let's look at this chart. This is what shareholder value looks like. Okay? And look where the stock is. This is a buying opportunity. Those of you who didn't get in when I first picked this name up and put it in my priority list, this is your opportunity to get in there. And by the way, they will be announcing earnings on Wednesday, August 12th. All right, that's it for the tabs. Real quick, let's see. Anything I missed from last week? I talked about Goldman Sachs a little bit. I talked about TSSI. We can cross that off the list. We can talk about that next week. We talked about this. We could talk about that next week. We talked about this already. We could talk about that next week. Okay, so that takes care of that. I'm going to talk about this company, but this is good. Okay, I need this note for when we talk about. Let me talk about some stocks I like. For those of you that have held on to the show, I haven't added any new names to my tracker. For those who've been keeping track, only one stock is down since I put it in the tracker over the last 2 years, since my daughter was born. And actually before, even this Evolve was put in here 3 weeks before my daughter was born. Geodrill was put in before my daughter was born. We have one stock down on this list. We got Watt back to zero here. No big deal, because a lot of people doubled their money on this stock. The stock was up more than 2x. They're still in the spreadsheet because I'm still interested in them. This is my idea tracker, ideas, interests. These are my, companies I'm very much interested in. So that's fine. But boom, you could do worse than buy the stocks that I'm interested in. There's a lot of stocks that I'm interested in that is not in the spreadsheet, may not make its way into the spreadsheet, but might. I've just been waiting. I will be adding a new company to this list soon, right? But the market, as you can see, has been acting very poorly and continues to, even as we speak today. I'm glad I shorted more QQQ before we got on this show to hedge my positions, because I bought more Crescendo, right? I bought more Gatekeeper, and buying as I buy these stocks, I want to hedge against the stock market going down. Most of the time, for small cap stocks, usually I will hedge those stocks with the Russell. The Russell is the small cap index. So I'll short IWM or buy RWM, which does the job for me. Either way works. But for my AI names that are really tied to the NASDAQ, when the NASDAQ goes down, watch, I bet you Wolf is down. Wolf must be down a lot. If the NASDAQ's down 1.3, Wolf must be getting crushed. There you go. Wolf's getting crushed. 12%. That's what Wolf does when the NASDAQ gets crushed. So I own some Wolf. And so for every dollar of Wolf I own, because I know Wolf will go down a lot when NASDAQ goes down a little, I will short as much NASDAQ as I own Wolf. And maybe more. Okay? And so that cushions the blow. That allows me to make money on my short of QQQ while I lose money on my long of Wolf. I don't own a ton of Wolf, but I own some Wolf. I like Wolf, right? And I like Wolf more at 22 than I did at 32. And so what will happen is eventually I'll say, okay, cool. I'm going to buy more Wolf now, but I'm not going to hedge it against QQQ because I think the Qs have come down enough. I think Wolf has come down enough. Now I can release the short on QQQ and use that money to buy Wolf, right? Without changing my gross exposure, for those you know what that means. So boom, NASDAQ acting bad, and so as a result, I am waiting a little bit before I add new names to this list. I want to give everybody every opportunity to do great. So I'm not going to add names until I see something super juicy and where the market's safe, the stock price is great, all that stuff. So what are some names that I like? Wolf is one of them. Okay. INVE is another. Let's see. No lines, by the way. I'm just telling you names that I like. I'm not going to get into details. There's not enough time today. Maybe we'll get into details in the future weeks. But these are great candidates to be added to the spreadsheet. What else do I like? CXDO, I like. If I say I like them, there's that means they're a candidate to be added to the spreadsheet. CVB, I like. CVB, okay. And KRMD, I like. I've talked about them plenty of times before. I like that here. And then DBOX F. That's DBOX Technologies. Okay. Don't pay any attention to that white line. Has no bearing on me. Not like that. That's actually my line, right? So let me delete that because that had something to do with something else. Actually, what that line was this being a resistance level. Okay, and I wanted to see it break resistance before I started to like the company because I wanted to see if people would actually let that break above while I was doing research. Long story. Anyways, put that in your notebooks. You guys are getting a little extra special information, right? Maybe a preview of things to come in the future. Man, we don't have time to talk about SpaceX. We got to get to Q&A. It's already 3:20, but I told you so. Okay. People ask me about this stock. Should I get into the SpaceX IPO? No. Right? And then it IPOs at 130 and it goes to like 230 and be like, see, Mark, I told you I should have gotten into that SpaceX. Shut up, stupid. Would you have sold it at 230? Like, if you like SpaceX so much, were you going to buy it at 130 to sell at 230? Or were you going to buy it at 130 to sell at 140? Or 150 or 160, or were you buying it to hold it? Because if you were buying to hold it, see, people love to say these things after the fact, but they won't tell you when they are considering the move to buy when they would plan on selling. So if you bought SpaceX on the IPO and you still own it, you've gotten smoked. The stock's 115. And oh, by the way, once it broke the IPO price of 135, there are a lot of institutions that automatically sell a stock that breaks the IPO price. Because the investment bankers are usually there to support the stock from going down below the IPO price. If there's so much selling that they can't hold the line, it just keeps selling off. And that's exactly what happened here. We got under 135 and boom, it just kept going. All right, so you got to be careful. That's valuation, y'all. SpaceX may be a huge success. They might take over the moon. They might own the moon someday. I'm literally telling you right now, SpaceX might own the moon someday. But it doesn't mean that the stock is worth 135 or 235 today. That's part of what my job is to do. All right, we took care of that. We talked about Google. We went through that math. That's great. Oh, I think we're almost done. I think we're ready for Q&A. Yeah, the only thing I wanted to show you, that's everything here except this. So let me show you this real quick. Why not? It's not so super important, but this is the Vanguard Total World Stock ETF going back to 2008. And what you see here is that you draw some lines under the bottoms, parallel line. Look at that. Toppy, toppy, toppy. You got to be careful. I told you you have to be really careful at these levels, okay? Yes, we can go, and believe me, I still believe there's a very good chance that this valuation bubble continues. because it is warranted. It may not, like, 3 years from now, we're going to look back and say, man, those stocks were a little ahead of themselves. Yes, that could be the case. But in the meantime, the earnings that they make now during this build out phase, I've been on record for a long time. I've said AI is not a bubble, but a bubble and a build out are two different things. I told you it is a build out, not a bubble. And a build out can be mistaken for a bubble. Because once the build out ends, if the ongoing build does not match the initial build, then you end up with a hiccup in demand and the whole market tanks, crashes. And everybody goes, see, I said it was a bubble. It wasn't a bubble, stupid, but have your day in the sun right now. It's really just a correction. Okay? It's coming from 30 years of experience in the industry. So you got to be careful about this. And I told you, if you want to play the AI game, be my guest. It was very profitable in 1999. And keep in mind that in 1999, it was very common for every single month, the Qs were down at least 6.5% from their prior month high. So every month had a drawdown of at least 6.5%. Well, look, we're only down 8.5%. And I said at least 6.5%. So 8.5%? Very normal, typical 1999-like behavior. And what would happen? Every month, the Qs were up in 1999. Okay? Every month. So every month we had a drawdown in the Qs, but every month, look at that. It just kept going up, 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 up. And it doesn't seem like there are drawdowns here, but this right here, this drawdown right here, my friends, that's 14%. It doesn't look like 14% because the Qs went up 100% that year. So 14% out of 100, yeah, that looks like 14% out of 100, right? But we're only halfway there right now. That can happen. And it will feel like death. But in reality, when it was all said and done, from the late 98 low to the early 2000 high, the NASDAQ was up 353, an index. The NASDAQ was a 4-bagger in 18 months. No wonder I made so much money. I wasn't as smart as I am now, which still isn't much, but, Let's go to Q&A. We got much more for next week. I got much more. We'll talk more about the stocks that I like so you can get some clues as to who might be the next stock that I add to the spreadsheet. All that stuff. But, hey, we got to keep you guys on the hook come back for more. By the way, there is on Apple and Spotify. The replay of this is in podcast form. Go tell your friends and family, anybody that doesn't want to tune in on YouTube. If you don't want to tune in on YouTube, you can check out the podcast. If you do, give it a like, give it a subscribe, give it a review, please, because that'll help get the word out. That's all I ask for you. For me coming here 2 hours every single week, all I ask is that little tiny thing. Hit the thumbs up button anywhere you see me and spread the word. All right. Can you share the iron updates we didn't get last week? Oh, we don't have time for that again. But look, long story short, there's your chart on iron. Okay. I think they've signed some great deals lately. I think those deals give them good return on invested capital. Okay. So I think that's very good. And I think as long as they can execute on building these data centers on time, quickly, and keep signing deals, which they should, right? The CapEx numbers keep going up. Google wants more compute. Anthropic wants more compute, right? But at the same time, Anthropic went to XAI. Why not iron? Nothing wrong with iron necessarily. It's just that XAI offered something better at that moment in time. Iron's going to get their share. They have been getting their share. They got another nice deal they announced in the last week. Spiked the stock 20% on that announcement. They had to raise guidance. Okay, that's nice. but I don't think execution has been pristine. Management just enriched themselves with like an $800 million RSU, restricted stock units. That's a stock award. They just give themselves that. The good news about that is now if somebody's offering to acquire the company, then the Roberts brothers are more likely to go for it, because now those shares, which vest over the next, let's say, 6 years in total. I know it's not exact; it's like 4 and 2, which equals 6, right? They would get all that right away. So they can get 800 million over the course of 6 years, or get 800 million this year. All else being equal, which one would you choose, right? Then they get to go off and do something else, maybe start a whole new company. So I do think that increases the chances that they get acquired. Overall, is this price decent? Yeah, this is a decent price to buy the stock. I've talked about them before, and I'll talk about more in the future if I have more to talk about. I don't love the company. I don't love the stock, but I do like it enough to own some, because they own these energy. They have access to energy. They have access to energy that a lot of companies do not, and that's valuable. They just need to monetize that access to energy asset faster. Okay? The faster they do it, the more the company is worth. And if they sell, if somebody comes and says, listen, we want to acquire your company for the access to energy, boom, that's instant monetization. That's what I want to see. A lot of people, I want the stock to go to 100. I don't. I want the stock to go to 50 next week, 60 next week. And I think I've said, in an acquisition standpoint, I think this company's worth about 65. I think the value of their energy assets and everything that's going on, I think it's worth 65. The stock's at 37, right? But that's in an acquisition situation. The odds of that, I think, just went up because of the restricted stock unit awards. But the stock went down because that's dilution, the restricted stock award. So it's a balancing act there. So there you go. For now. Charts. People want charts. AVEX. Market's ugly. High beta stocks are ugly. AVEX is ugly. Drones, a little out of favor in the market right now. I don't know why, because the fundamentals are strong. The fundamentals are still strong. If the NASDAQ turns around and starts going up instead of down, you see that big rainbow, right? That topping pattern rainbow. It's like, if that stops and we finally start going up, and I think certainly if we get to the red line here on the Qs, what kind of red line is that? Oh, that's right. It's the top of the red line. If we get down to that red line, and another month or so passes, we're going to be closer to the end of that liquidity, remember that word, liquidity headwind. And if that liquidity headwind goes away and the market is lower, all else being equal, if Royal doesn't go to 200 or something like that, then the Qs are going to reverse course and do what they do more times than not, and rally in Q4. Look at this massive Q4 rally. Well, Q4 starts October 1st. Right now it's July 24th. So there's a lot of time between now and the end of September. And by the way, it'll probably be until mid to late September that the government is creating that liquidity headwind. So there's risk here. But remember, I showed you that article. There's a couple things that are bullish and there's a couple things that are bearish, and who knows how it's going to turn out. But because of the balance being bullish and bearish equally, I want to be hedged. I'm continuing to be hedged. That's working out for me so far. I'm making money short QQQ and IWM, not so much, but IWM has started to roll over as well. It finally did break the 50-day moving average and is going, there it is. It finally broke the 50-day moving average, which could be a sign of things to come, because when the Qs broke the 50, that's what happened. All right. Okay. You want charts. I don't cover BABA, so I'm not giving you the BABA chart. You can look that up yourself. I don't cover LightPath either. I'm not going to give you charts that you can look up on the internet. I don't talk about these companies, really. No offense. Maybe someone here can develop a fear greed index based on Nasdaq specs. I mean, I don't know. Be my guest. I'm not going to do that. I'm doing research. I'm trying to find the next multi-bagger. Does a company's actual technology with AI matter as long as it slaps the AI sticker on the product? Yes, it matters a lot. It's really, really important. Um, okay, we've got a troller there. How am I supposed to trust a bald guy? What's it supposed to mean? Is that the best you got? Like, that's weak. I don't know or care who you are. Maybe I do know who you are and you're just joking, but um, boom, gone, gone. See ya. I mean, was it worth it? I hope it was worth it because nobody saw you. Those messages were put forth like you could see those messages because it said, should we hide these messages? And it was still under hide or show. And I never hit really show. So some of your messages went unseen and now you're banned from my channel. I mean, what's wrong with you? I mean, it's so sad. I feel so bad for you. I pray to God that whatever mommy and daddy did to not give you the love that you need, because this is what it is. Like you're looking for attention. I'm looking at this now. I just said ban this person, and I see all of these messages under like wiped out. You were tried to hijack the chat here because mommy and daddy didn't give you love. You didn't get that breastfeeding. You didn't get that baseball lesson. And that's sad. And everybody here, all 250 people are sad for you. And I'm sad for you. And I'm praying for you because you have reached a point in your life where the only way you can derive enjoyment is to hurt others and get attention. And congratulations. You just got 2 minutes of attention on this show. May God help you with the rest of your life. See ya. I don't care about trolls, dummy. What's the next question? CXDO, do you have insight as to how much revenue to expect from the ESI acquisition this quarter? No. Why would I? Right? That's called insider information. If I had an idea, then I would give you the idea. You would have heard it in my opening remarks. No offense. Look at this people. This guy got so much attention. I mean, look, at least he got attention. I don't know if he's still here, right? But congratulations. Congratulations. Go get attention somewhere else, I guess, because now you're banned from the channel. So stupid. I feel bad. Dude, I really feel bad for people like this. Do you think GSI becomes an acquisition target? Everybody's an acquisition target. All of my companies are acquisition targets. Okay? And by the way, guys, don't respond. Don't respond to trolls. I see that here. Don't pity them. Pity them. All right? That's all you do. You ignore and pity them. I'm sorry I didn't catch it earlier. That's my fault for not noticing what was going on, right? Because it distracted you, detracted from the show. That's my fault. Okay? And boom. What are you going to do? Like, somebody like that is never going to be successful and never going to find true love, didn't have true love earlier in their lives, and that's a tragedy. We only get to live once, and this person gets to live his that way. So what? Life goes on. The rest of us are lucky to not have that. There's your Clearfield chart. Next. See, and this is the thing. You guys responding to him clutters up the chat. Makes it harder for me to answer these questions. GeoDrill. Put that in your notebook. GeoDrill, on June 12th, you talked about going aggressive if they dip after breaking to the upside. Is that suggestion specific to GeoDrill, or could that be applied generally to other stocks? It can be if the news flow warrants it. You saw, did you see my gatekeeper presentation? If you see that in any other stock, it doesn't have to be one of my names. If you see that kind of momentum in a stock that's getting smushed at reasonable risk-reward levels, I don't know who's going to build your risk-reward chart for you. That's the problem, right? Because I do this for you. So you can see it's very reasonably priced. It's in the middle of the risk-reward range. They seem to be operating on all cylinders, right? And so it becomes easy. You see the momentum. You see the valuation. Go. That's all there is to it. It's valuation and momentum. If the business is operating on all cylinders, then the valuation should be full. Easy. Super easy. We don't need specific questions to go with that. Can you elaborate on concern for, I think I've already answered the question. Okay. I don't know about concerned though. I don't know what is baked into the numbers for Q2. I didn't say I'm concerned about Q2, right? Because the momentum that we saw in the business, did I already get rid of that? I did get rid of that. Let's see if I can bring it back. Because Q2 is April and May and June. And clearly, April was off the charts into May. And I don't know when they recognize revenue because they got these deployments. So I don't know when they got paid. When they, if this was just digestion of all of this, then they might have had a great Q2. I don't know. And that's why we have the risk reward charts to follow things along, right? What we do know is the momentum in the deployment number has stalled. That's all we know. That's all I know. Because the company is in their quiet period. They're not going to tell me what's going on right now. And they might not tell me even before they go into their quiet period. Which, by the way, the quiet period usually is about 2 weeks before the quarter ends. It's like since June 15th. They're not really talking to people about how the business is going. How big a threat is a potential Oracle collapse to AI in general, given how big a player they are? Oracle's not going to collapse. Oracle's too important a company. They're too big a company. I've been following them since the early 90s. I've been following Oracle since professionally following them since right there. Okay? I've known about Oracle a long time before this, but right here is where I started professionally following Oracle. This is a phenomenal company, and even if AI hurts them, and you see it has, they're still going to keep going. Okay? There's going to be no collapse in Oracle. Whoever's telling you that. After Innodata's last quarter report, you said you missed out on that one. Now the stock is down 50% from the top. Are you interested? No. I don't like the company. I don't like what they, I get what they're doing. They're doing something useful for AI right now. It's useful. But I don't like the sketchiness of management. I don't mind missing. I don't mind that there is no FOMO to me. I'm looking for tens. Okay? If I walk into the bar and the girl's got a bulge in her pants, I'm not taking a chance. Okay? That bulge might be a wad of money waiting for me. I'm not taking the chance. Why take the chance on that one when I can just go find another one that looks just as good without a bulge in their pants? You guys have to stop that. Be picky. Be picky. A Clara chart. There you go. It's interesting, by the way, right? We're at the 200-day moving average. That's interesting. Let's see. For what? Isn't the Walmart additional store rollout more important for the stock short term rather than the Amazon deployments? Maybe. That's a great question. Great freaking question. All we have visibility into is the AWS rollouts, but we don't have visibility into the magnitude of the ongoing Walmart rollout. So that could have been off the charts and they report some phenomenal Q2. We don't know. We don't know. What do we know? We do know that somebody did an analysis of their IP. We do know that they think it's worth $100 million. We do know that they have $7 of cash. We do know that $7 plus $14 of IP equals $21. So all else being equal, Watt at the 200-day moving average, regardless of what they report in Q2, regardless. This is a good place to buy the stock assuming that everything is still going. And I have seen no sign. I've seen no sign that the story has changed. I see no sign that their usefulness to what's going on out there has changed. If I picked the stock today, it would be under the same story I picked it months and months ago. Right? Same story. No difference. So that's why these risk-reward lines remain unchanged. The only thing that's changed is the price and therefore the risk-reward. The risk-reward up here was bad. It was close to the top of the risk-reward lines. Even though it looked like they were operating on all cylinders. But guess what? Then you see the thing flatten out. Now it looks like maybe they're not operating on all cylinders and the stock comes down. That's what risk reward is about. That was the risk. The risk was the momentum slows down and the stock gets hit. That happened to Kraken. Right? There was my red line on Kraken. It tripled from there. And it since dropped back. What kind of pullback is that? 48%. Kraken's down 48% from the top. Those people are still up. If you held that stock, when I said buy at 67 cents and it tripled to $2 and you just kept on holding it, you're now at $4.30. You're down 50% from the top, but you're still up a lot from when I got out. You're up 95% from when I got. So who cares if you lost 50%? You're still up. You made double the amount that I did. And by the way, this right here, look at this chart. Look at it. Look at it. Now, that's why I have those puts on air and why I'm okay with people owning air above the red line if you want to take that chance that we see the AI bubble continue moving these stocks forward. Because Wall Street estimates are ratcheting up on the price target. So they haven't even gotten their estimates to where mine are for revenue and profits. They need to raise their profit and revenue estimates, but they already have price targets of 110. From where we are right now at 75, 110 is what? 45% up from here. That's nice. If you want to, right, take a shot on this AI quote-unquote bubble. Just know, right, that these corrections like we got in 1999 is the risk you take. I told you, this is not for the faint-hearted. When I first told you you can play this bubble if you would like, I told you how to do it and what to be prepared for. Next question. We're going to go lightning round in a second. Looks like Crescendo is on your priority list. You said you might add it. I mean, I talked about, you might have asked that question before I told you about the stocks I like. Let's keep going. There's a lot of chatter here. I'm looking for 3 question marks at the beginning of your question. You guys gave this guy way more attention than he deserved. I mean, cool, I feel bad for him, and hopefully he feels good about, the chaos he caused. But that's not how you handle somebody like that. You know what I'm saying? Like, somebody like that needs to not get any attention so he can reflect on why he wants it so badly. So that he can maybe go to church, and have somebody explain to him that the love that he didn't get from mommy and daddy is not because he's a loser that needs to make everybody else feel bad so he can feel good about himself. You understand? Don't do that to people. You're not helping them get to a positive outcome in life. You're just keeping him where he is. And I feel bad for him. You might say, good, let him stay where he is. I get it. You're mad at him, but it's not his fault. Can you give us your thoughts on the 30 million share filing for OPTX? Yeah, I mean, it doesn't change the valuation. It just means that the CEO can now sell shares if he wants, right? It doesn't change the valuation, though. And this guy probably has a better idea of what his company is worth than the rest of us do. And I said before, based on the great research done by Rob Mock, which I think still holds up, they've been showing progress, they've been winning deals, they've been proving what he suspected would happen, maybe a little slower than his model, but still progress. That's not bad, by the way. Um, a, if TSSI doesn't do 80 million in revenue, that's not a bad thing, as long as they make progress, right? Beat the street estimates. I think right now OPTX is beating the expectations that people had before Rob got involved and told us that our expectations should be higher. And from that research, I said the stock is worth closer to 12 than 6, way back here. And multiple times you had an opportunity where the stock went closer to 12 than 6, take some profits, came back down to 6, buy it again, goes closer to 12 than 6, take some profits, buy it again. It went right past 12. I never owned a share past 12, okay? Because I felt it was worth closer to 12 than 6. It's got warrants at 11.50. It's got RSUs that trigger at 12, 14, and 16. There's a lot of resistance above 11.50. And so anything above 11.50 is going to have gravity attached to it. And that's what's happened. This has been a great stock to trade. And right here, if the Qs, if the NASDAQ turns around, if the market starts acting nice again, I think this is a great place to buy the stock. Let's see, look, it's coming up on its 200-day moving average and all that stuff. Okay, but that's an if. I'm being pickier than that right now. It's not that I don't like the stock, right? I do, but I will like it better once I feel better about the stock market continuing lower. There's other companies I like more right now that I want to buy right now, and I told you about them on this show. Stay tuned. And by the way, don't ask me if I bought the shares yet. I only disclose things, like I volunteer this information. I don't answer those as questions. So let's see. Irex, any insights on what seems like a hostile takeover? I don't like the capital structure. A lot of you people don't know how to look at capital structure. No offense. This includes good friends of mine. I'm not a master of capital structure either. I lean on some friends for capital structure. I just know that you have to understand the capital structure as part of your research on a company. And I think I've talked about this financing and how it's toxic, and it's proven to be toxic. Okay, don't have time to go further than that because we're in the lightning round right now. Curie chart. This is another company enriching themselves with restricted stock units to an overly high degree. Radcom's another one, by the way, but now that there's a new board, you're not going to see that anymore. See? So that's a positive when you see those things disappear. IZEA chart. No, this is a good one. Look, this stock keeps drifting lower. This is ridiculous. This company has $3 of cash, and it's trading for $3.35. You're paying 35 cents for the stock. Okay? 35 cents. It's this close to the green line. If you don't own this stock, I think you should. This is one of my largest holdings. It has been one of my largest holdings. I've been losing money on it. Right? I made money on it, losing money on it, and I'm fine with that. Right? Because I still believe in the story. Nothing's really changed. We haven't heard from them in months. Maybe people just got bored, tired, or whatever. But it's stupid. Are you dumb? Why would you sell a stock that has everything that I've talked about? There's even an article on my website, markomstocks.wordpress.com. You can read it and see all the promise, all the upside. Look, you just have to look at this chart to know what all the upside means, right? There's your red line, there's your green line. And they have $3 of cash, and you're going to sell it at $3.40. That's stupid. I'm glad this is the first time you're asking a question, Lugan. Do you expect the next quarterly earnings as a catalyst turning point? Anybody that Anybody that doesn't have proof of why they think a quarter is going to be great, like what I took you through with TSSI, that's great analysis. Not to pat myself on the back. That's what I consider to be great analysis. Okay? People don't do that. They just guess. It's going to be a great quarter. There are 10,000 clowns out there, and that's 99% of all the people out there are clowns. 99% of the people tweeting out there are clowns, and you're listening to them. You're wasting your time on them. You need to find the people that are not clowns and only pay attention to them. Those people will not answer this question because the answer to the question is, I don't know. All I know is this stock is too cheap to not own at these levels. And if the quarter is great, the stock will rip. Great. And if the quarter is not great, the stock, maybe it goes down a little bit, but then it's closer to $3. At $3, I'm paying $3 for $3. There are private companies out there. If IZEA got the same valuation metrics as these private companies, the stock would be closer to 10 than 3. But that's the beautiful thing about the stock market. That's what I love. I love that people are willing to sell the stock at $3.39 with $3 of cash and all that opportunity. Because if they weren't, I wouldn't be able to buy stocks for a third or a fifth or a tenth of what they're worth. And that's what you need to do to get a 3-bagger, a 5-bagger, a 10-bagger. That's how you get these multi-baggers. It's when other people are stupid enough to sell that stock to you because they don't understand what's going on. They don't understand how to really value a company. The quarter is nothing. A quarter in a DCF analysis, a quarter is like 1%. 1% of the DCF analysis. A stock should go down 1% if they have a bad quarter, if everything else remains intact. Honestly, really. If nothing changes about the company's future, but they have a bad quarter, the stock should go down 1%. It's just rough numbers. It's more volatile than that because people are dumb. GSIT chart. I like GSIT as a speculative play, purely. I tried to find out if they're for real. It's hard to tell, but there's a good chance that they are. Evolve. I like Evolve. You guys know that, and I like it at this level. I think they're going to have a good quarter. Okay, I will say that in this case, and I have proof behind it. I'm not going to get into that right now. Maybe I will next week. Maybe not. Don't ask. Right. When it's appropriate. There are signs that lead me to believe that the quarter might be good. Not a ton of signs. If I had a ton of signs, I'd tell you already. Let's keep going. We've got to end the show. Appreciate your teachings. Just asking as a reminder, any plans for updating don't remind me. You don't think I know this, bro? By the way, you ask too many dumb questions. If I had time to be Coach A-hole, I would be on you. Okay? You ask too many dumb questions. Calm down. That's what I'm saying. Like, you might not know the difference between a smart question and a dumb question, and that's cool. That's why I'm telling you, calm down. All right? You're trying, you think you need to know more than you really do. I'm telling you what you need to learn. Put it in a notebook. That's what you need to learn. Everything else, you don't. SNES. I don't care about SNES. I told you I don't care about SNES until they're closer to gold mine. I'm going to tell, like, that'll be the same answer every time. I'm not going to say anything else. It's lightning round. TPCS chart. Love TPCS and the setup. We're right here. Look, 50 and 200-day moving average about the cross. We're about to get a golden cross on TPCS with, boom, this is great. I like TPCS here. If you don't own TPCS, this is a good place to buy it. Last question. When a company has a ton of cash from selling a division, but is now burning cash, but enough money to cover 10 years, should one build that towards a fundamental support estimate? Yes. Yes. Like if you've got, if a company has $10 million and they're only going to burn $100,000 per year or 100,000 per quarter. You say, okay, maybe you count that 10 million as 8 million or 7 million. But there could be a good chance that an activist comes in. This is the last comment of the day. There's a good chance when there's a lot of value in a stock like Radcom, sitting with $7 of cash, okay? That attracts the attention of activists. And the activists will come in and they will want that cash to be released to shareholders. And when that happens, it happens in the form of a special dividend, which carries lower capital gains. So all else being equal, a $1 special dividend will make the stock go up more than $1 post-dividend, okay? Or a buyback, or both. And all that stuff is bullish. So you want to own these situations a lot of times. That's why I mentioned INVE, by the way, as one of my names of interest, because they've got like, I think the company's probably worth $4 with all the cash they're sitting on. The stock's sitting at $2.70. That's too much of a discount on all that cash because something can happen there. If the stock was closer to $4, not interested. It's not an exciting company to me right now, but there's just way too much value there. And in a market where I have a bunch of cash on the sidelines, let me put some cash in this company because I'm buying cash for I'm buying $1 for less than $1, much less than $1 in this case. All right. We went just past 2 hours, so I don't even get to check to make any last minute trades before the weekends, which is fine. I like to end the show at 3:55. We went to 4:01. That's love. That's love for you. That's the penalty for having a troll on the show. So be it. All right. Every once in a while we need a troll so I can remind you how to handle them, not just on the internet, but in real life. Okay? People that try to put you down like that are just trying to get your attention because mommy and daddy didn't give it to them. I am showing my daughter so much love. I'm giving her all my heart because I want her to know that she is loved and that she is important. Because that carries on through life. When she leaves the home and goes off on her own, she will not troll people because she will not need external attention because she knows that she has it no matter whether she's home or away. That love transcends. Now imagine somebody that didn't get that in life. That's sad. Don't pay those people any mind. And have a great weekend. We'll be back next week on Friday with Money Mark, Stock Talk Live. Have a great weekend. All right, let's check the damage. We got to do our Duolingo. Let's set that up. Check the stock market, how we ended up. The Qs. How do they end up? Zoom in. Yeah. Didn't get worse. Did we make money today? That's the question. Rolling the dice. Did we make any money today? No. We made no money today. We lost money today like the rest of the market. No big deal. Big deal. I love my portfolio. I don't see any real mistakes in the portfolio. And that's the important thing. Look at that. Wow. TSSI down 7%. Wolf down 11%. Hard to make money with those kinds of hits. Woo-hoo-hoo. All the more juiciness to potentially buy on Monday, though. Look at that D-box up. Good stuff. All right.